Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 410 on January the 16th, 2026. I'm your host, Eric, and in this week's show, we'll cover the trades from last week on Bitfarms, Rezolve AI, Energy Fuels Inc., and EOS Energy Enterprises. And we discuss 4 new trades on Navitas Semiconductor Corporation, ImmunityBio Inc., Poet Technologies, and SoundHound AI. Now, it's always great to hear from listeners. If you have any questions about the trades presented here or about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. I've also created a few videos to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit the website and click on the videos tab to watch them, or visit the YouTube channel for the Weekly Option. Now, the stock market finished a week that was full of news with a very small week-over-week change. The Dow Jones Industrial Average lost 144 points, closing at 49,359 points. The S&P 500 index lost 26 points, ending the week at 6,940 points. And now it's time for the topic of the week. The topic of the week is defining risk. There are countless white papers and academic books that attempt to quantify risk. For most retail investors, those equations are far less relevant than simply understanding the personal risk to your account of each and every trade. You should know the risk for every trade before you enter it. This is why I prefer starting new traders off with spread positions. Spreads have a defined amount of risk right at the start that's easy to quantify. If you can do simple subtraction, you can calculate the risk of a spread. It's important to always know what you can lose on your position at any point in time. If you buy a call option, your risk is the amount of money you paid for the call option. If you sell a call option, your risk is unlimited because there is not a cap for how high a stock price can go. If you buy a put option, your total risk is the amount of money you paid for the put option. And if you sell a put option, your total risk is the strike price of the option minus the amount of money you collected for selling the option. Because stock prices do not go negative, selling a put option does not have unlimited risk like selling a call option. The price of the stock can only go to zero. So these are basic concepts that I've seen even experienced option traders get wrong. Always understand how much money you can lose in a trade. I define risk as the amount of money that you can lose on any trade. I promise you this will keep you from getting into a trade that is far riskier than you can afford without knowing it. Always do the math and always know your total amount of risk. All right, that's it for the topic of the week. Let's go ahead and get into the review of last week's trades. We're going to start off with the covered call on Bitfarms, symbol B as in Bravo, I as in India, T as in Tango, F as in Foxtrot. At the time, the stock was trading for $2.80 per share. I looked at buying that stock and selling the February 3 call at 30 cents, hoping for a return of 17.86% in 6 weeks. Well, shares of Bitfarms grew 16 cents, ending the week at $2.96 per share. The call option we sold picked up 6 cents, leaving us with a net gain of 10 cents if we were to close the trade out immediately. Now, with the stock price heading higher, we have no reason to make an adjustment on this trade. This trade is working out as planned so far. Now, we will need to keep an eye on the stock for the next 5 weeks until expiration. If the stock price stays above our break-even point, we will chalk up a nice profit. This trade is working out as planned, so no adjustments are needed. Next up, we have the cash secured put. We looked at Rezolve AI, symbol R as in Romeo, Z as in Zulu, L as in Lima, V as in Victor. At the time, the stock was trading for $3.69 per share. I looked at selling the February 350 put at 50 cents, hoping for a return of 14.29%. Now, shares of Rezolve AI grew 91 cents, ending the week at $4.60 per share. The put that we sold lost 25 cents, leaving us with a 25-cent profit if we were to close the trade out immediately. Now, the strike is $1.10 below the current stock price, providing us with a little bit of cushion so far. So keep track of the stock price and have a plan for managing a drop in stock price if that happens. Hopefully the stock will remain above our strike through expiration, so no adjustments are needed at this point. Just keep track of the stock. Next, we have the credit spread on Energy Fuels Inc., symbol U as in uniform, U as in uniform, U as in uniform, U as in uniform. At the time, the stock was trading for $18.13 per share. I looked at selling the February 18-17 put spread at 38 cents. That could give us a maximum possible loss of 62 cents per spread. Well, shares of Energy Fuels jumped $3.83, ending the week at $21.96 per share. The out-of-the-money put spread that we sold is even more out of the money. The stock price is currently $4.34 above our break-even point. In short, this trade's working out as planned as well. No adjustments are needed so far. And our final trade for last week was a debit spread on EOS Energy Enterprises, symbol E as in Echo, O as in Oscar, S as in Sierra, E as in Echo. At the time, the stock was trading for $15.28 per share. I looked at buying the February 14-15 call spread for 62 cents. That could give us a maximum gain of 38 cents, or that's a 61.29% return in 6 weeks. Well, shares of EOS Energy grew $2.17, ending the week at $17.45 per share. The in-the-money call spread that we bought is now even deeper in the money. The stock price is just shy of being $3 above our break-even point, so no adjustments are needed on this trade either. Thankfully, it's working out as planned. We are still 5 weeks away from expiration, so you'll want to make sure you have a plan for protecting the trade if the stock does move against you. Locking in a profit ahead of expiration is also a nice possibility. So still no adjustments are needed at this point. So that's it for the review of last week's trades. Today, Friday, January 16th, was expiration for all January monthly options. All new trades on today's podcast will use the February 20th expiration for monthly options in February. Let's go ahead and dive into the new trades for this week. We're going to start off with a covered call on Navitas Semiconductor Corporation, symbol N as in November, V as in Victor, T as in Tango, S as in Sierra. The stock ended the week at $10.90 per share. I'm looking at buying stock and selling the February 11 call at $1.20, hoping for a return of 11.93% in 5 weeks. Now you enter this trade by buying stock for $10.90 and selling the February 11 call at $1.20. This trade makes the most money if stock prices finish above $11 per share. The break-even price on this trade is $9.70 per share. In real terms, the stock purchase would require $1,090, and you would collect $120 for selling the option. Next up, we have the cash secured put. I'm looking at ImmunityBio Inc., symbol I as in India, B as in Bravo, R as in Romeo, X as in X-ray. The stock ended the week at $5.53 per share. I'm looking at selling the February 5 put at 75 cents. That would give us a return of 15%. Now you enter this trade by selling the February 5 put at 75 cents. This trade makes the most money if stock prices finish above $5 per share. The break-even price on this trade is $4.25 per share. In real terms, you'll collect $75 for selling the put option, and you'll have $553 locked up just in case you need to purchase the stock. Heading to our credit spread on the week, we're looking at Poet Technologies, symbol P as in Papa, O as in Oscar, E as in Echo, T as in Tango. The stock ended the week at $8.30 per share. I'm looking at selling the February 8-7 put spread at 32 cents. That could give us a maximum possible loss of 68 cents per spread. Now you enter this trade by selling the February 8 put at 72 cents and buying the February 7 put for 40 cents. This is a credit spread because we are selling the spread, and this trade makes the most money if stock prices expire above $8 per share. The break-even price on this trade is $7.68 per share. In real terms, you'll receive $32 per spread that you sell and have $68 at risk. And then our final trade on the week is going to be a debit spread on SoundHound AI, symbol S as in Sierra, O as in Oscar, U as in uniform, N as in November. Stock ended the week at $11.10 per share. I'm looking at buying the February 10-11 call spread for 60 cents. That could give us a maximum gain of 40 cents, or that would be a 66.67% return in 5 weeks. Now you enter this trade by buying the February 10 call at $1.62 and concurrently selling the February 11 call at $1.02. This is a debit spread because we are buying the spread. This trade makes the most money if stock prices expire above $11 per share. The break-even price is $10.60 per share. In real terms, you'll pay $60 to enter the spread, and your maximum gain is $40 per spread. That's it for this week's show. Thank you guys so much for listening. Thanks for following along with me. Feel free to email me if you have any questions. Lots of updates coming. I've been working hard for you guys and looking forward to what 2026 is going to bring. Hopefully you are optimistic about this year for yourself as well. So have a fantastic weekend, and as always, happy trading. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer: there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.